As always, welcome to Tuesday Talk with Bim Group. I'm your host, Deanna Sizemore. I'm the Director of Compliance for Bim Group, and I come to you every couple of weeks on a Tuesday afternoon to talk about what's new and going on with legislative and regulations and that sort of thing. So, this year has been full of regulations and proposed changes starting right before Christmas, leading up to the most recent January 7th. The EEOC released their proposed revised wellness regs, which I'm going to get into in just a moment. But first, I want to answer a couple questions that we got on the regs from last time we talked. So the last conversation we had on Tuesday Talk, if you missed it, you can go to bimgroup.us/COVID-19, scroll down to Tuesday Talk, and click on Tuesday Talk, and then you can see the recordings from the past weeks. Or if you're part of our Facebook group, you can go back and watch the recordings on the Facebook group. So last time we talked, we talked about the extension of the FFCRA, which is the Families First Coronavirus CARES Act, that allows for employee paid sick leave and emergency family leave. Both of those leaves ended December 31st. However, the government has said if an employer wants to, they can continue to offer employee paid sick leave and emergency family and medical leave. However, you don't have to, but you can. One of the questions that we received is, does the employer receive a new bank of time for sick leave or family leave? They do not. The same bank of time they got last March when this was issued is the same amount of time they have. So they got 10 days of sick leave, and then they got the 12 weeks of family medical leave. If they've exhausted that, they don't get any more. So they're still going to get just their original 2 weeks and their original 12 weeks. It does not start over. There's not a new bank. If they've used it already, there's nothing for them to use now. And again, as an employer, you do not have to offer that through, I think it's April 1st of this year. But if you choose to, you can certainly do so. You can also offer one or the other, vice versa. You don't have to offer both. So if you wanted to continue to offer employee paid sick leave for anyone who is diagnosed with COVID or has encountered someone with COVID, is on quarantine at the request of a doctor, then you can absolutely do that part and not do the emergency family medical leave part, or again, vice versa. I think it would make sense if you were doing both before and you want to continue doing both, that you continue doing so. The same tax credits are there, the same breaks are there. So the only thing is you're not getting that new bank of time for employees to start over. Let's see, there was another question. I think it was just is like, can the employer tweak any of the provisions under FFCRA and still obtain the tax credit? No, you cannot. It has to be the way the law was written, and that is how it's going to move going forward. You cannot tweak it to make it work for you or your company. You have to use it the way it is in the regs through the end of the year, with the voluntary extension first quarter. So keep that in mind. You don't want to change the way it's written. You just want to move forward as it is. So any questions on the FFCRA, and then we'll jump into these proposed wellness regs. I'll give it just a minute. This is always the crazy part because I have to wait. So. All right, so if a question pops up, I'll go back and get it. But for now, I'm going to go ahead and move forward. So a couple of years back, the EEOC issued wellness regulations that did not match up with HIPAA regulations when it comes to wellness plans. HIPAA said you could have 30 to 50% of an incentive. EEOC wellness under ADA and GINA limited that to 20. Then they said somewhere between 0 and 20. Then those rules were vacated due to court cases, and they were sent back to the drawing board. So what I'm about to talk about is what they have come up with after they went back to the drawing board. So on January the 7th, the EEOC released proposed wellness rules for this year. There is a 60-day comment period. So if you hear something in here that you like or you don't like and you want to make a suggestion to the EEOC, you have 60 days from January 7th to do so. I plan on sending a letter just because there's some things that doesn't make sense to me, and I'll kind of talk about what that is. So just keep in mind these are proposed. Here's the caveat to that, though. Even though they are proposed, the EEOC says they're kind of the law of the land until they're finalized. However, there's not a lot you can do between now and then, and they could change. So I would say for the next 60 days, just stay the course. But know that you may have to make some changes to your wellness plan going forward. So under the proposed ADA rule, most wellness programs that have any disability-related inquiries or require a medical exam, such as a health risk assessment or biometric screenings, can offer no more than a de minimis incentive. De minimis includes things like a water bottle or a gift card of $5 or $10, a very modest value. In contrast to that, incentives such as paying for an employee's annual gym membership or rewarding with tickets for an airline are not de minimis. So what the EEOC has landed on is if the wellness plan is available to everyone, not just those in the health plan, but it's open to everybody, and it requires a standard health factor to be reached, the reward or the incentive has to be de minimis. If that wellness plan is only for those in the health plan, then that wellness incentive can be the same as the HIPAA wellness incentive, 30% or 50% if you're including tobacco, non-tobacco. The difference and the catch here is it has to be a wellness plan that requires a standard of health to be met, and it has to be only for those in the health benefit plan. Sorry, I was trying to figure out a better way to word that, and I could not get that out. So the maximum reward is 30% of the total cost of employee-only coverage, or 50% if you're including tobacco, for a wellness plan that meets the HIPAA requirements of a wellness plan that is attached to the health plan and requires a standard of health to be met, so a health contingent wellness plan. If it is a participatory only plan, the participatory only plan is stuck at the incentive limits of de minimis value. So if you have a health contingent wellness plan and it's only for the people in your health plan, we can move forward with the same incentive limits as HIPAA allows today. If the wellness plan is not attached to your medical plan and it's open to all your employees and it's participatory only, any incentive has to be of de minimis value. Think $10 or less. So any type of premium discounts or large $100 gift card or gym membership would be out the window. This is the ADA portion. The GINA portion is a little different. So I just want to focus on the ADA for just a moment to make sure we understand that. So with the ADA rules, has to be health contingent, has to be part of the health plan. We can still meet the HIPAA incentive limits. If it is not part of a health group plan, or group health plan, if it's not part of a group health plan and it's only, or it's only participatory, then you're subject to the de minimis incentive limit. Now, cautionary tale on a wellness program that's participatory only, where you ask everyone to take a biometric screening, whether they are in the health plan or not. That is participatory, that is open to everybody, that is subject to de minimis incentive limits. Health contingent plan, you have to do a biometric screening, you have to do a health risk assessment. If you meet certain factors, you have to go through lunch and learns or something along those lines, and it only applies to those in the health plan. then you can do the 30 to 50% incentive limits. Where we get different and sideways on the GINA side of it, and this is the thing that doesn't make sense to me, and I think I'm going to send a comment to the EEOC, is that under the EEOC GINA side, if a family member, spouse, is asked for any type of health-related question, health risk assessment, biometrics, the incentive is limited to that de minimis amount. There is no exception on the GINA side like there is on the ADA side. With the ADA, again, if it's part of the health plan, it's health contingent, we can do 30 to 50%. Under GINA, you can only do the de minimis. So to include a spouse in a wellness plan where they're going to have to do a health risk assessment or take biometrics, that incentive limit cannot exceed the de minimis value amount. So if you have premium incentives attached to that, that would need to be addressed in order to move forward if these regs stand as they are today. They did offer one caveat to that. Under GINA, if that participant takes a health risk assessment and we find that they have high blood pressure, EEOC GINA will allow a plan to pay for a program that spouse can go into for counseling. So, for example, an employee who disclosed family medical history of diabetes, heart disease, or high blood pressure on a health risk assessment, and the employees who have current diagnosis of one or more of these conditions are offered $150 to participate in a wellness program is designed to encourage weight loss and a healthy lifestyle. That does not violate Title II of GINA. So if they qualify for one of these programs, you can pay for it or you can give them an incentive for it. If they don't qualify, then no. So it's not going to be as cut and dry as we are under HIPAA right now. So it's going to be really interesting to see how these final regs pan out. But again, these are just proposed regs. Could they have an impact on your wellness plan? Absolutely. Could they align GINA with the ADA side and all is well, we can move forward with life? That could happen. So I think we have more to come on that. And again, if you've got some concern about that, I would definitely suggest reaching out and having a comment sent to the EEOC. And I can include that link on our Tuesday talk on the website just so you can have it. But I just wanted to, reiterate, a health contingent wellness program that is part of a group health program are accepted from the de minimis rule under the ADA, while participatory programs that simply require someone to complete a health risk assessment or take biometric screening are subject to the de minimis incentive limit. With these changes, the EEOC also did away with the requirement of the additional wellness notice that is required now. There's a wellness notice that you have to give out that says, here's what we're doing with your data, here's who's collecting it, here's how we're going to use it, here's where it's going to be stored. That notification would go away. That's good news because that's one less notice that has to be given out to employees. However, remember, participatory only plans are going to have to really scale back on any type of incentive that there is there. Whereas a health contingent program should be fine under ADA. Step to the side with GINA, where we include spouses, we have another issue. So just some things to think about as you look at these changes and look at the proposed regs, which I'll post a link to as well on our Tuesday talk page. But here's some considerations. You want to think about incentive levels. Does the program offer incentives? Do they exceed the de minimis threshold? What kind of plan do you offer? Is it a health contingent plan? Is it a participatory only plan? Is it employee versus spouse? Is it both? Is it all employees or just those on the group health plan? If your wellness program gives employees alternate options to earn rewards, Some of those components are participatory while others may be health contingent. You should carefully look at that to make sure you fall within the guidelines the EEOC has addressed. An example here, and this is, again, with the proposed regs from a couple years ago that were vacated, we have wellness plans where if you do 5 of these 10 things, you'll get the reward. And 5 of those things may be biometrics, a lunch and learn, a health risk assessment, a flu shot, and watching a 2-hour video. So your 2-hour video and your lunch and learn are participatory, while your other 3, your flu shot, your biometrics, and your health risk assessment, are health contingent. So that would be something that would need to be looked at. I don't think we're going to be able to piece together wellness plans in such a way that makes sense for us or for the employees or for the employer like we've been in the past with if these new rules pass as they are proposed. The other thing to think about is that form of incentive. There is no mention in the ADA regs if an employer can contribute incentives to a health savings account or health reimbursement account. We have a lot of groups that do that, and we need clarification from the EEOC if that's going to be allowed or not. And then, obviously family participation. Do you want to include spouses? And if you do, then those incentives have to be limited to the de minimis amount. When medical information is collected, if medical information isn't collected, you've got a participatory plan. A participatory plan, we're still limited at de minimis. So I think the EEOC regs did really well on the ADA part. I think they've got some work to do on the GINA part. And then last but not least, think about taxation. Again, something de minimis value is not going to require taxation, but something of more value is going to require taxation. So if you did a $50 gift card to everybody for doing their health risk assessment, that $50 gift card is taxable as income to that employee. So some things to think about. And I know that was a lot in a little bit of time, but again, proposed regs, I would not worry right now. I just keep them in the back of your mind. Make a decision on if they do pass as they are. Reach out to your Bim Group advisor or client service manager, and let's talk about your wellness plan just to make sure that everything is aligning with the EEOC regs. My hope would be is if the proposed regs are finalized, that we would have a future effective date, maybe mid-year, so that people don't have to scramble to try to get plans in place, but not sure what that's going to look like. It's taken them almost 2 years to get to this point, so hopefully after the 60-day comment period, we'll get final regs and we'll get a future effective date. So with that, the floor is open for questions. I know that was a lot. It can be related to this situation or anything else that is top of mind for you that maybe we haven't covered today. I know there's been a lot in the news with the PPP loans. You can get more money if you're a small business. You can apply for those. There is additional changes you can make on a flexible spending account for healthcare and dependent care. We talked about those a couple weeks ago. Definitely can go back and refresh on those if you've got questions. We still have COBRA extension through the end of the national pandemic, and that has not been declared ending yet. We have a new president going in tomorrow, so we'll see what happens in the next couple weeks if that affects benefits in any way. But I really wanted to talk about the wellness regs and see if anybody had any questions on that. And I'm not seeing anything, so hopefully I'm not missing. Oh, I'm seeing a couple questions. Okay, so I don't know why I'm not seeing comments on my phone. Make sure I haven't missed anything. So Jeannie, you need a refresher on all things HCR. Okay. And Dina from Kentucky Bank, it's good to see you. And Diana and Kelly, I see you guys on here. And Benji. All right. If I've missed your question, I apologize. I did not realize they were not showing up on my phone. Sometimes they do and sometimes they don't. So that's why I keep it on my screen behind me. So, hey, Jeannie. Okay, so everything is popping now. That's so funny. everything that's on my computer is now popping up on my phone. So, all right. Well, I will not belabor. We try to keep these to 20 minutes or less. So, if you've got any questions or you think of something after the fact, let me know. I will post these two questions that I talked about in the beginning regarding employee paid sick leave as well as emergency family medical leave, along with a link to the EEOC regs and where you can post a comment to the EEOC. I will put that on the Tuesday Talk page underneath the video from today. So with that, if you've got any questions, you know how to reach me, deanna@bimgroup.us, and I will let you go and get back to your day, and we'll see you in a couple weeks. Thanks. Have a great afternoon.